Hey, welcome back to the channel, you beautiful people. Can you believe it? We are now in the fourth quarter of 2022, last 3 months of the year. What a roller coaster of a year we've had in real estate. In this video, we'll be doing something different, but kind of the same. We will look at our usual stats, how the Bay Area housing market performed not only last month, September 2022, and compare it to September of 2021. We will also look at September to August, the month-to-month comparison, and I will compare the first 3 quarters of this year to the first 3 quarters of 2021. It just seems appropriate to see what is really going on in terms of the numbers. At the end of the video, I'll give you my thoughts on where the opportunities are in the market, if any. What should you be doing if you're a buyer or a seller? And with prices going down, why are we still hearing that at the end of the year, we should still be up? Hey, my name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome back to the channel. The data is from my local multiple listing service, Bay East Association of Realtors, as of October 1st, 2022. This is for all types of properties. As always, if there's a specific city that you would like information on, comment below and I'll get that to you. I do these update videos to give you a glimpse or a high-level look of what's going on around the Bay Area. If you need help buying or selling, give us a call, a text, or an email, and we will be happy to help you out. The real estate landscape is completely different not only from last year, but even as late as the first and second quarter of this year. Not really a lot of people expected this. Last year, this time, inflation was around 5% and mortgage rates were in the low 3%. These are the two major differences that we have right now. The fight against inflation is way off target if you ask me. The way I see it, our current inflation is caused by 3 things. 1 is demand, 2 is production issues caused by the pandemic, and number 3, geopolitical issues caused by the war in Ukraine. Yes, it's also true that the Feds printed so much money and made it cheaper for everyone to borrow. In housing's case, I would argue that this actually just sped up most people's decision to buy. In other words, it wasn't as if all of a sudden thousands of new home buyers magically came out of the woodwork because of the lower mortgage rates. They were already out there thinking of buying a home down the line. Anyway, I'll get off my soapbox. Let's look at the Bay Area real estate market. This is how it's affecting the real estate market. It's slowing down the number of transactions and also bringing down price. Let me show you. Let's start with Alameda County. The number of sold properties went down slightly on a month-to-month basis by 5%, while the year-to-year, it's down big, 30.25%. Days on the market is up by 7 days, meaning it's taking longer to go pending, from only 11 days back in September of 2021 to 18 days this past month. The median selling price is down 3.77% year-to-year, from $1,060,000 to $1,020,000 this past month. Month-to-month, it's also down 3.5%. from $1,057,000 to only $1,020,000. Take a look at this price chart. The blue is 2022 and green is 2021. This is for the first 3 quarters of this year for Alameda County. As you can see, we peaked around May and then we've been going down little by little. Now, if we look at the first 3 quarters of last year, it's a little bit different. We kind of just continued to go the same level. And when you graph the rest of 2021, you can see the price was going down ever so slightly and started picking back up at the beginning of January of this year. Let's move on to Contra Costa County. The number of sold properties went down on a month-to-month basis by 16%, while year-to-year, it's down 33%. Days on the market doubled, meaning again taking longer for things to go pending, from 10 days to 20 days this past month. The median selling price down slightly year-to-year, from $805,000 to $800,000 this past month. Month-to-month, it's up by 2.56%, from $780,000 to $800,000. Now let's look at this price chart. Take a look at the blue for this year. Prices seem to have peaked in April and we were going down ever so slightly, but went back up again this September. Now, if we look at the first 3 quarters of last year, as you can see, we have that upward trend at the beginning and also started to go down or level out towards the end of the year. Moving on to Marin, the number of sold properties went down on a month-to-month basis by 19%, while year-to-year it's down 33%. Days on the market went up by 4 days, from only 19 days back in September of 2021 to 23 days this past month. The median selling price is up both month to month and year to year, 2.61% and 4.61% respectively. Now let's look at this price chart. For this year, it seems to be a little bit all over the place. It peaked in March and then it went down for a couple of months and then back again, followed by 2 consecutive months of decline. And now we're back up again, which is kind of the same if you look at the green bars for 2021. Price seems to be going up and down and then settling just below the 1.3 million mark. Moving on to San Francisco County, the number of sold properties went down on a month-to-month basis by 15%, while year-to-year it's down 32%. Days on the market went up by 11 days, from only 14 days back in September of 2021 to 25 days this past month. The median selling price is up month-to-month and down year-to-year, up 7.53% and down 4.48% respectively. Now let's look at this price chart. For this year, it peaked in April and then it just kind of seesaws back and forth the subsequent months. As opposed to last year when it peaked in June and went down slightly but pretty much stayed in the $1.4 million range. Let's move on to San Mateo County. The number of sold properties went down on a month-to-month basis by 6.75%, while year-to-year it's down 34%. Days on the market went up by 8 days, from only 10 days back in September of 2021 to 18 days this past month. The median selling price is up month-to-month but down 2.64% year-to-year. Now let's look at the price chart. For this year, it peaked in April and then went down 3 months and just leveled off at this $1.5 million range. As opposed to last year when it peaked in July and went down the next month by around 200,000 and then steadily climbed back up the rest of the year. Let's go to Santa Clara County. The number of sold properties went up 2.6% on a month-to-month basis, but down a big 29% year-to-year. Days on the market went up 8 days, from only 9 days back in September to 17 days this past month. The median selling price is slightly up month-to-month and also up year-to-year by 3.51%. Let's look at this price chart. For this year, it peaked in April and it's going down slightly every month, and like I mentioned, up less than 0.5% this September. Now, if we look at last year, again the green bars, it went up steadily until June. Then the next 3 months, it went down a bit, but the last quarter, it was steadily climbing back up again. Let's move on to Napa County. The number of sold properties both down big month-to-month and year-to-year, 18.58% and 31.85% respectively. Days on the market actually went down from 36 days to only 27 days. The median selling price down month-to-month by 9.25%, but up a good 10% year-to-year. Now let's look at this price chart. This year, Napa seems to be just going up except for this month, while last year, it was just all over the place. Let's move on to Sonoma County. The number of sold properties both down, month-to-month down 9.68% and year-to-year down a big 41%. Days on the market went up by 1 day. The median selling price is down month-to-month by 1.27%, but up a good 9.15% year-to-year. Now let's look at this price chart. This year, you can see when compared to last year's, it somewhat has the same pattern. Up at the beginning of the first half of the year, and then it starts to go down towards the end. And finally, Solano County. The number of sold properties both down. Month-to-month, 9.31%, and year-to-year, 24.9%. Days on the market went up by 10 days, from 22 days to 32 days. The median selling price is up month-to-month by 0.65% and 5.18% year-to-year. Now let's look at the price chart. The chart looks similar to Sonoma County, going up the first half of the year, then slightly going down towards the end of the year. As for 2021, it was pretty much just steadily going up. That's our Bay Area real estate summary report for the month ending September 2022. Looking at the numbers, it was only Santa Clara County that was up month-to-month in terms of the number of transactions. I think one of the reasons for this is that there's still a lot of home buyers in Santa Clara County that have a lot of money and are well qualified that could not compete in the last 2 years with buyers that basically just had more money to throw around. Now that competition is lower and they are able to get into this housing market, and that's why we're probably seeing this spike. Marin had the biggest decline month-to-month, down 19.42%. Year-to-year transaction decline, Sonoma was the biggest, down 41%. In terms of days on the market, only Napa went down. The rest of the counties are all climbing. But again, like I have said in my past videos, these days on the market number, they're still very good. Now, for the price, it was mixed. Some counties were down and some were up. San Francisco had the biggest gain month-to-month, up 7.53%. Napa, the biggest month-to-month decline, down 9.25%. Despite having the biggest month-to-month gain, San Francisco also had the biggest decline year-to-year, 4.48%. The biggest year-to-year gain in price was Napa, 10% gain, followed by its neighbor Sonoma at 9.15% gain. As I have said in the beginning of this video, we can blame inflation and the Fed's response to all this. As the Feds keep up their aggressive fight against inflation, we will continue to see mortgage rates go up, which in turn will further slow down the market, which is leading to home prices declining. That is actually one of the things the Feds wants to see, for home prices to go down. Which is really dumb if you ask me, because they are making it unaffordable for everyone that wants to buy a house. So the people that they are actually trying to help, they end up hurting more with this continued policy of rate hikes. Like I've said so many times, the problem is supply. That's why prices keep going up. This is like telling an overweight person, you know what you need to do to lose weight? Go work out, and work out a lot. Meanwhile, this overweight person continues on with whatever crappy diet he or she has. And what happens? Yeah, maybe they lose weight, but eventually it comes back. Why? Because the biggest issue wasn't addressed. And this is what will happen to us down the line. When mortgage rates stabilize, or when people start realizing that rates are never going to go back to the low 3%, buyers will be back, and we still don't have the supply to meet the demand. And we go back up again. It kind of sounds simple, right? It is. So what do? Well, let me tell you what I'm seeing right now. Home sellers still don't want to admit the shift has happened and they missed the boat or the top of the market. They either end up lowering their price much more to get the sale done, or I see a lot of sellers that either say, we'll hold off on our sale, or just rent out their house. This is also the reason why prices are not crashing down. Sellers don't want to take the perceived loss. I say perceived because right now, it's the psychology of missing the top of the market. It's not like they're losing money. They're just not making that much. On the home buyer front, a lot of home buyers right now are just scared of how the economy is going and the financial hit that they've taken because of inflation and interest rates going up. And some of the buyers that are out there are just downright unrealistic. Or maybe I should say overly aggressive when making lowball offers. By the way, check out this video that I have about lowball disorder. It's gonna help you a lot. So with all these turmoil going on, and it seems like that every month home prices are going down, why is it that experts are still saying that we end the year better or higher than 2021? I mean, doesn't it seem like the roof is starting to cave in on everyone? And when you watch the news or read the news, all you hear is falling prices. Well, simply put, like I showed you in the graphs for all the counties that I just talked about, everything was front-loaded. Our first quarter, and to some extent the second quarter, was so good because there were a lot of home buyers that still wanted to take advantage of the lower interest rates. And this drove prices higher because of the demand. So even though this next 3 months, if we do see declines, the gains of the first half of the year will just cover it up. It's literally, to use a sports term, a tale of two halves. All I can say is that Chairman Powell is leading the whole economy into destruction.
Today, the FOMC raised its policy interest rate by 0.75 of a percentage point, and we anticipate that ongoing increases will be appropriate.
Well, I don't know that for a fact, but he is definitely slowing down the real estate market, both in terms of the number of transactions and price decline. Hey, thanks for watching. If you want to know what's going on in your specific city, please comment below and I'll send that info to you. If you need help buying or selling real estate, you can reach us either via text, email, or call us. Thanks and have a great day. Please hit the like button and share and subscribe.